Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. Just gone 4 p.m. here in Sydney. I'm Juliette Sarli. Let's have a look at where the market is tracking. We actually are down again, down by about 1/3 of 1% there on the CBO 200. I think a similar loss coming through on the ASX 200. It's off by about 0.2% of 1% as we head into the close. A lot of weakness coming through from the miners today. Also those consumer staple stocks being hit, REITs as well switching out. But there has been a good gain coming through in energy players, continuing to watch closely, of course, what's happening with the potential ceasefire in Ukraine. Financial stocks also looking good, and industrials up by about 0.2% of 1%. Let's get to the themes of the day though, because what a reporting rollercoaster. What have we got? 2 days left now, but today we heard from so many. You've got the likes of Kelsian Group dragging today on its first half, but the second half, according to the CEO I just spoke to, looking better. You've got Woolworths shares also coming under pressure after its result today, and WiseTech, of course, retreating, even though it did have a little bit of a bounce earlier on the fact that Executive Chairman Richard White has been reinstated. He is, of course, the co-founder. Is this a wise return that we've put there in quotes? We did speak to James Gerrish from Shaw and Partners earlier saying, look, at least in terms of what the market is thinking, because he founded the company, is he going to steer it back? Of course, it had that huge drop earlier in the week on the exodus of 4 board members. And steady as she goes. Well, CPI pretty much unchanged, at least the headline rate in January annually, but we did see a little bit of a tick up, I should say, in underlying inflation, or that trimmed mean to 2.8% annually, and that was mainly as you saw the exclusion there of those electricity costs taken out. But in terms of what we've seen from sectors today, the banks, let's have a look at those. There was a little bit more positivity coming through. CBA up by 1.6% along with ANZ. Energy stocks I mentioned also looking quite good today. But you are seeing Santos and Beach Energy Strike also under pressure. Woodside, though, is the big one. And of course, it reported yesterday. We spoke to Meg O'Neill today. You can find that on the website. Quick look as well in terms of some of the corporate stories we've been following. WiseTech posting a 38% rise in first half profit. It did increase its dividend, but echoed its warning from the other day that full year revenue will fall at the bottom end of its guidance. Now, shares are up 2%, so I'm reading a wrong article here that said that they did retreat, but never wrong for long. Wooley is under pressure, down 3%. Scentre Group off by 4% after its earnings. Flight Centre down by some 11%, and we are also looking at Linus, which reported a steeper than expected drop in first half profit, sending its shares down by 2.5%. Let's discuss it all though with Mark Gardner from MPC Markets. Now, good to see you. You wrote a really great piece for us for The View yesterday, but I'll let you sort of explain it in terms of what we're seeing with WiseTech here.
Yeah, look, I think obviously the analysts rushed to be fairly positive on WiseTech, but realistically now, obviously, Richard White sort of flexed his muscle. He's now been appointed chairman as well. So shareholders and analysts are effectively hostages of Richard White now, basically. And one of the glaring omissions I found from any of the assessments over WiseTech's business and the results today was no one's addressed the key person risk. So essentially, by having 4 executive board members leave, who obviously thought, leaving one of the highest posts in an Australian technology company you can possibly have was a good idea. There's really no hope of having any sort of succession plan for a very long period of time. And I also think that this rosy view, just because a company's been on a tear and has done a very good thing and has a moat, etc. You can't live on the past forever either. I think people are also underestimating how fast AI and AI software moves. That moat can be eroded in a year.
Yeah.
Whereas in the past, say 2021, it would have been something more like a 5 to 10 year timeline to even take a bite out of WiseTech's dominance. But there are companies in the US that are already, it's just part of their software when they're managing AI with these AI programs with supply chains. So for us, it's not the governance issues alone. I mean, you can see with the delays in their projects, etc., which is very un-WiseTech like. They're distracted, and rightfully so. It's been reported in the AFR today that he also sold $200 million worth of shares after December 24th. ASIC's doing preliminary inquiries, so at a 100 plus PE, you really want to be faithful to the new chairman because you're essentially absolutely hogtied to him for as an investor for the next couple of years minimum. So, and he's a 7-year-old man. I mean, it realistically, like, company that's I think number 17 in Australia's market cap and by far one of our best success stories in tech. It's pretty basic and mandatory to have a succession plan. So I think the analysts are being, just a little bit glossing over what, if it wasn't WiseTech and these things were happening, this stock would be halved in the last 5 days.
So that's a really interesting point, and you don't need to necessarily talk about this company in detail, but Kelsian Group is one of the biggest losers today. I was just talking to the CEO and he's leaving after 15 years, and he did mention the importance of the succession plan. So let's just talk about that in I guess, broader context as well, because you look at the new Woolworths CEO as well and how she's trying to turn things around.
And look, succession plans are super important, but I mean, there's been a couple of really great female CEOs in the past. Xero, taking over at Xero, the company's done nothing but, I think it's rallied 100%, just about. Lady Woolworths as well was head of their digital division, but globally, that's regarded as one of the best personalised marketing programs in the world. And she was absolutely at the forefront of that. So, and she was always obviously the heir apparent as well. But it's having that smooth transition, obviously, it has to, for companies of these size, of these sort of sizes, you can't just operate like a startup anymore. You've got, WiseTech at 32 billion odd in market cap. I mean, it's a little bit irresponsible to just be it's my company. Well, it's not. There's a good 60 or 70% of the rest of the shareholders that have put their money back to you. You have a responsibility to them. So, but I think it is important. I mean, Kelsian, that result as well. Obviously, a lot of these earnings reactions have been very one-eyed. So they've seen a headline and the moves. And
then you see them bounce
vicious.
back today, like Johns Lyng bouncing back today.
But Johns Lyng, they've effectively cornered themselves a little bit because they don't comment on catastrophe, but there's $400 billion worth of repair work. They can't even get assessors in the LA fires. So they've kind of cornered themselves in a way by not saying that there's going to be a large pipeline of work. And the rest of their business as usual did quite well, but down 30% was quite an extreme move considering they dropped 40% on that catastrophe cover. And I mean, the insurers have done very well. I think Steadfast was really underrated today. Just another super solid performer. Organic growth plus their roll-up growth. Insurance companies have been doing well. Margins have been great. But up, another compounded 21% improvement on just about all metrics. The stock ended up down. So Woolworths as well. There was strike action in there. So it seems to be the market reactions are very simplistic initially, quite often, and then it starts to settle over the coming days. But as we bought more John Lyng yesterday. We usually hold that with an insurer to smooth the risk of the trade. But that was pretty scary, down 33%. And just
good time to buy, though.
Well, it turned out to be.
Yes.
So.
All right. Well, this time next week when you're on, we're going to have moved on from reporting season. Hopefully, it's been a big month. What would be your sort of report card score so far?
I think there's been a bit of broad negativity overhanging. I think the companies have reported better than the market's reacted, personally. And obviously, and will be done in the US as well, because Nvidia's tonight and Salesforce, which are really the last two, Nvidia's the tentpole essentially for US earnings. I think we obviously go back to worrying or looking at the economy and probably those jobs numbers, etc. But the market at the moment feels a little bit shaky. If Nvidia doesn't report well tonight, I think that that could trigger a much broader sell-off. We've got I think we've got the Russell 2000 through the 200-day moving average for the first time in 16 months. I think the S&P and the Nasdaq are both through 100-day moving averages for the first time in well over 6 to 8 months. Yeah. So and there's not really going to be any earnings to sort of salvage that. You've seen some severe moves in the likes of Microsoft and Tesla and etc. just sort of gone a little bit unnoticed. But and I think people are just growing weary of Trump's just constant erratic announcements.
Yeah, it's
so
exhausting, isn't it?
I mean, how do you plan for a business when you don't know on a day-to-day or hour-to-hour basis whether your products will, your competitors or your products will be subject to tariffs, or there's going to be a trade war, or what your taxes are doing. So I think October 2023 is the last time we've had any form of significant pullback. And once we get, I think March, April can tend to be a time when the market can pivot a little bit. So we're sort of recommending, anything you don't have a high conviction in, pretty happy to go back to cash and hold a decent sized cash balance, because you want to be in a situation where if the market does dip, I don't think there's anything wholesale wrong with the fundamentals of the market. It's just a bit overpriced. So you've got some money to possibly buy into those undervalued, all those names a little bit cheaper, rather than doing what you've had to do for the last year and pay really high valuations and just cross your fingers and hope for the best.
Well, we do that every day anyway. All right, Mark, thank you as always, Mark Gardner from MPC Markets. And we talked about Woolworths, so it was the stock of the day. David Novak from Wealthwise Education and Ashley Glover from CMC Markets join Nadine.
I would have sold it this morning if I had it, when it bounced up very strongly to 32.50 on lower earnings, so I would have sold it there, and it's pulled right back. So it's actually had a big trading range of $2.50, so that's very negative technically, that it's pulled back sharply. So there's nothing to me that would have me rush out and buy Woolies, either fundamentally or technically. So to me it would be definitely a sell or a hold. If you bought it ages ago, you might hold for the dividend.
I take a sort of a bit different perspective, looking from maybe more of a shorter term analysis as a trader, as opposed to a longer term investor. And if we look at the chart there, we can see Woolworths has formed a solid base there. So it's a solid level of support. And we're back into that level of support at the moment. But interesting for me is the MACD down the bottom of the chart there. We're seeing positive MACD. It's come from a very low base there, and we're now up into the positive territory. And for me as a trader, it's offering quite a decent reward to risk ratio there.
That was a spectacular chart. If you're listening in podcast, go and watch it on the website. But let's have a look at the market leaders there. Bapcor doing very well after its numbers. Worley up 10% to 15.42. Johns Lyng rebounding after being sold off yesterday, as was Light & Wonder and Smart Group. To the downside, Kelsian Group, we touched on that. The market disappointed with its numbers, and along with Flight Centre, which is down more than 10%. SiteMinder, Fortescue and Mineral Resources also lower. In the small end of town, PointsBet had a great session, up 31%. EML Payments up almost 13%. And the laggards in the small end of town today were Aravella Therapeutic down almost 30%, and Platinum Asset also had a bad day, down 20%. Let's have a look at what we are seeing tonight. US new home sales for January, along with crude oil inventories and a meeting of the G20. While tomorrow it is Thursday, we've got quarterly private capital expenditure getting to the pointy end of reporting season, with Qantas, also Coles, Karoon and Medibank Private coming through with their numbers. Having a look at where the market is, we are down 1/3% on the close. The ASX 200, I think, did a little bit better, down 11 points, or about 1/10%. 80-20-40 is where we are, crossing below its 125-day moving average, with a lot of the weakness today being done by the miners, the consumer staples and the telco players. All right, that does it for AusBiz for this Wednesday. We'll be back from 9:45 a.m. Eastern tomorrow. We'll see you then.